Housing's been down, and it's anchoring inflation 2.4%, 2.5%. But the fear and the uncertainty of oil and how long it will stay elevated because of what's going on in Iran is got the stock market selling, not buying, selling. It's risk off.
Banning our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Park City. I apologize that the snow sucks, and I did not get a video out earlier this week. I am way overdue. I usually do Monday and Thursday, but it's just been a very busy week. Is everyone noticing their locks are up? Locks are up, even though rates are up. We have a few industry people here. Anybody recognize these guys? Let's go. John, Dan, Timmy. Jim Park's here. I don't know where he's at. Anyway, what's going on in the world today? So rates have gone up. The 10-year Treasury is up well over 420, but it's been in this range for months. So we know the trend wants to go down. The CPI report came out, the Consumer Price Index, and unfortunately, as good as it was, didn't matter because all anyone cares about is what's going on in Iran, at least in the world's flow of money. So we're talking about a couple things that most people aren't talking about, certainly on LinkedIn, maybe not at all, but there's a lot of flow of money right now, and money's a little bit scared because there's uncertainty, a lot of uncertainty. I mean, we're at war with Iran. You know, they were named by President George W. Bush as part of the axis of evil, and we never really did anything against them. This is not a political statement. This is a statement on what's actually happening. So the Strait of Hormuz is responsible for allegedly 20% of the world's oil flow. Now, the IAEA, which is like the International Energy Association or something like that, they basically said 9.5% of the world's oil is stopped right now. Now, they could get up to 20. So there's this hot flash risk of inflation. Remember, for the last 15 months, oil has been down, even though like food and energy is volatile, even though energy has not been, it's been down, but now it's up. And so if we stay at, let's say, Goldman Sachs said $10 more per barrel for 3 months, that would negatively impact CPI and bring it up to 3%. But the CPI report that came out yesterday was at 2.4% headline and 2.5% core. Now, no one's talked about it, and I guess it doesn't matter in the moment, but housing has always been the biggest inflation component of PCE and CPI, and it's down. It just keeps trending down. We all know we're in the housing industry. We know that housing has been, by the way, the view is sick over here. Just wait a second. Housing's been down, and it's anchoring inflation 2.4%, 2.5%. But the fear and the uncertainty of oil and how long it will stay elevated because of what's going on in Iran is got the stock market selling, not buying, selling. It's risk off. And this not just oil that flows through the Strait of Hormuz. So let me just give you two things. So aluminum, like just under 10% of the world's aluminum supply comes from the Middle East. And don't worry, this is a dog, not my dog. That could impact things. And fertilizer. No one's heard anything about fertilizer, but fertilizer helps us grow food. So that, and then energy prices being up for like diesel and other things to like increase the cost of shipping food plus the cost to grow food is now another uncertain component. Look at that. Not any snow on the mountains except for some runs. That's Park City Mountain, and Deer Valley's over here. So good little spot. God, I wish I could have skied this week. It has been busy. I've been on the phone all day, every day. We just had a WeWork space. Greg and Brian, BV, Brian View, and Greg Sherry, you should have been here. I know, I get it. You're traveling, you got to watch your kids. But the flow of money has really been hurting mortgage rates. So what happens is a lot of people who are on the fence and are floating are locking. So I think a lot of us have noticed a ton of locks. Like locks are like not quite double month to date versus February, but there's a lot of locks right now. And I would say it's because it's spring purchase season. So, regardless of rates, going from, 4% on a 10-year Treasury to 4.26, it's not a big difference, especially with the Treasury spreads between the 30-year fixed and 10-year Treasury yield being pretty compressed. If you're buying a house for the 7Ds, deployment, diamonds, diapers, debt, divorce, say debt again after divorce, we already said it, downsizing and death, people still need a roof over their head, and that's not stopping. So there's a seasonal trend right now. I sat next to a guy today from Pennsylvania. He's like, oh yeah, like our weather's is great right now. So people are out, they're hunting. It will turn into a sales contract, which will turn into a loan, which will come in the door. So locks are in a good spot. Okay, so beyond inflation and beyond those metrics, again, getting back to the stock market, which matters. Like talking about the stock market, I'm not a financial advisor. I'm not responsible for your losses, only profits. If money is selling out of stock market and going to the safe haven, the dollar has gotten stronger, and it's a safe haven bet. We're not seeing it show up necessarily in Treasury yields. We're seeing it show up in the Dixie. So look up DXY. That is a dollar ETF that kind of tracks how the strength of the dollar has been, which has been weakening. We have a Fed meeting next week, and obviously they're going to punt with all the uncertainty. There's a new Fed chair that's been announced with Kevin Warsh. So we have a lame duck Fed chair, Jay Powell. So the market's going to test the new chair in May. So industry news, the Road to Recovery Act passed today. Big deal. The Mortgage Bankers Association obviously leads the way. Many other great organizations have contributed, and that's great. It's like in over 10 years, there hasn't been a housing bill passed. So that's a good thing for housing. Try and see the government put some of its largesse to work, and not sure, the outcome of that. But let me say one more thing about oil. Higher priced gas and energy creates demand destruction. That people just say, okay, well, I'm not going to fly, I'm not going to drive. There's going to be less shipments. It should bring the price of oil down, but there's a lot of fear of the supply chain, and our economy is used to supply chain disruption. I mean, we kind of make room for it. We have the worst supply chain disruption ever during COVID. So, I'm not saying I know the outcome, but I feel like this could be short-lived. It all depends on how long this operation lasts in Iran. My gut tells me is that I think everyone around the world wants, a less fanatic and Islamist state to run the government and save the people of Iran. But I think the people of Iran are going to be disappointed because whoever's in charge is going to cut a deal, say, all right, we want to be in charge, which means they may not do the right thing for the people of Iran. But if they say, we're not going after nukes and we're going to let free trade happen in the Strait of Hormuz, I think that's all they have to do to cut a deal. And that's politics. That's why I hate it so much. It never works out for the greater good. Anyway, earnings season has ended, but it will kick off in just a couple of weeks in April, and we'll see how the banks tell us that things are going. Private credit is the black swan event that's kind of playing out right now. Since Dodd-Frank, there's been a shadow banking system where banks offer private credit on the side to not really be part of their balance sheet and have to have more capital. And in this fear-based timeline we've had for the last, let's call it 30 days, there's been 3 funds, BlackRock, Blue Owl, and JP Morgan Chase, where the redemptions, people basically saying, sell my money, I want my money, I want to get it out. And all 3 of those funds are like, well, too many of you are asking for your money out. Can't do it. So that's giving the private credit market a little bit of a scare. And that does impact rates in the stock market. If this wasn't about oil and inflation wasn't a risk to go higher, you'd probably see rates get better. So there's a lot going on right now. Last week, I was in Sacramento with the California Mortgage Bankers Association. We had our board meeting. We were there trying to make sure that, they don't pass a Community Reinvestment Act bill in California to go after IMBs who have no access to federal home loan banking or any kind of funds, no deposits. We do all the work, by the way. IMBs do all the work in California doing hard loans. So it kind of doesn't make sense. There's a forbearance 36-month proposed bill that we also are against at the California MBA. We let them know. I was at, together with Paul Gelati, our president, our CEO, and another group of guys and women in the governor's office on the 9th floor in Sacramento. We were trying to oppose these bills, and we just, it was one more, they wanted to go back to guaranteed replacement costs and insurance, which I think is also a bad move. Even after we told them for the last 3 years, your cap on rates is dumb, and then they had a fire in Palisades in Altadena, and we told you so. So, there's a lot of lobbying efforts going on. ICE experiences next week. I'll be there Sunday to Wednesday. I've got a panel at the end of the day on Wednesday with Kevin Kaufman from Freddie Mac and Jonas Moe from ICE. And that's at 1:30, I believe, Pacific time. So lots going on, lots of travel, and the rest of the way. Have a wonderful weekend. We'll get back to you next week. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.